All right, welcome to the Right Tack, where we help private practice owners face the headwinds of the healthcare industry. I'm Paul Jonas, CEO and co-founder of BreezyBilling and Phoenix Credentialing.
Well, and I'm Jim Jonas, a therapist, co-founder of BreezyBilling and Phoenix Credentialing, and co-founder of the Jonas Center.
In today's episode, we're getting into something every practice owner or aspiring practice owner needs to get right: how to structure your business. Should you be a sole proprietor, an LLC, an S-Corp? What's the difference, and why does it all matter?
Well, and to help us navigate this thing, we're joined by a very knowledgeable guest, Devon Liljenquist. He's a CPA and attorney with Arrow Advisors, and they work with small businesses across the country. Devon helps business owners set up the right legal and financial foundation from the start, advises on tax strategy, planning, and even business exits and sales. We've known Devon for a number of years now, and he's a great guy to work with. All right, let's dive in. Devon, thanks a bunch for being here. Before we jump in, wondering what you're doing this weekend.
This weekend, I am going to play contractor. A house I live in is about 100 years old, over 100 years old. And in 1921, they didn't think much about practicalities. So we've never had a bathroom on our main floor. So anytime we had guests, they had to traipse all the way up the stairs to use the bathroom. So it's been a project that's lasted longer than my wife would like, but we're adding a bathroom, and I've got final steps on that, specifically adding a door, because that's a good thing to have for a bathroom. But yeah, so I'm hoping I end the weekend with all my fingers.
Oh, okay, this is great. We have a nephew who has a bathroom without a door. I don't know what that's about. So, oh my gosh. And Devon, do you know the rule of thumb when you're doing that remodeling stuff about how much it's going to cost and how much time it takes?
No, what's the rule?
I think that's a
you
3X.
At least, is it 3X, Paul?
It's a 3X, yeah. Always triple the time.
So 3 times the cost and 3 times the time.
Yeah. I'd say that's about at least for the time portion so far. That's definitely been accurate.
Okay. Yeah.
Did you do a lot of the work yourself on the bathroom and all the plumbing and all that?
Yeah, and that's what's taking so long is, I did it's a lathe and plaster, so I had to rip all that off, and it's just been a dusty mess.
My wife and I used to live in a house built in 1927, so we did a little remodel in that. And, yep, I hear you, man. It's a mess, and then it's a lot of work to get back.
Yep.
And
so
it's all worth it. Your wife is going to be really happy about it, Devon.
We'll see.
Okay.
So, Dad, what about you? What do you got going on this weekend? Or really, should I say, what do we have going on this weekend?
Yeah. So we're headed off to the Finger Lakes area of New York State, upstate New York. There's a Jonas family reunion with all the cousins. All the aunts and uncles have now died. We've been doing this, I think, since 1994, every 3 years. So we're going to get together, all the cousins up there, and enjoy some of upstate New York. It's people that I've talked to who know about this just to say it's a wonderful area. Oh, and we're going to go see Niagara Falls. That's great. I can't wait. Oh, man. So, yeah. There's also a number of breweries, and we're taking a boat ride and stuff. So, Paul, what do you think?
I think it's going to be a blast. It's also always fun to get a bunch of Jonases together because it's just this times like 30 or 40 or 50. I don't know how many people we have coming to this, but it's a little rockets for sure.
Yeah, should be good.
Okay, well, let's get into it here. We know our audience is full of behavioral health providers who've either started their practice already or they're seriously thinking about it. And one of the first and most confusing decisions they have to face is, what kind of business entity should I be? A lot of people do that on their own, or will just talk to other therapists who have done it. I'm always surprised at this, or otherwise sometimes they'll talk to their accountants and their accountants won't know some of the needs of So that's the big question that they have to answer right away off the bat.
Right. Well, and there's so many entities that are available, like sole proprietor, LLC, and S-Corp, single member LLC, C-Corp, partnerships. There's an awful lot, a lot to think about, a lot of choices to make. And I think
Mhm.
there's definitely a pros and cons to each one of those choices. I don't know. Devon, can you help us make sense of all of this?
Absolutely, absolutely. I would say, number one, you got to talk to somebody first. I mean, much as I know what I'm doing, but there's also others that do. So if your listeners have somebody that they're comfortable with, that's great too. But you gotta plan ahead. I'd say the only wrong answer really is to not do anything at all.
Mm.
Meaning you just, it's your personal name. There's no entity attached to it. That's certainly, simple in that you don't need to do any formation. You're ready to go. But it leaves you exposed primarily legally to lawsuits and what have you. So the not doing anything would be the sole proprietor route,
Okay.
meaning, I could go put out a lemonade stand out in front of my office right now, and I'd be a sole proprietor lemonade business. So that's the type of entity that can happen immediately or without even knowing you've done so. Um, the, the difficult part is some of the interplay between legal and tax. And
Right.
the one I hear a lot, and the one that's kind of become the buzzword catch-all, is the S corp. And it a lot of people think that that is the magic wand that just makes your taxes go away. And it's certainly a great strategy. It's probably the most common one that I recommend. But the thing to clarify is that if you went to your state and said, I want to form an S corp, they wouldn't. They just look at you with a blank stare, because S corp and C corp are not legal designations; they're tax designations.
Okay.
So you can have an entity that is, can be an LLC taxed as an S corp, or a corporation taxed as an S corp. But from a state law standpoint, S corp is just a tax election. So I think that's one thing. Um, Now, what I recommend for most people, because of its flexibility, is the LLC. LLCs are a newer creation, if you will, actually back to like 19. I think Wyoming was the first one. They've always been kind of on the cutting edge of different legal entity structures. But around 1980, the LLC became a thing. And the idea was we want the flexibility of a partnership with the legal protection of a corporation. So LLC was kind of created for that. And so it is very rare for me to recommend anything but an LLC from a legal standpoint. Um,
My question that I was going to ask is like legal versus tax. Like, why do I care? Or how do I differentiate that? I don't know. So that was. What about you, Dad? What was your question? Let's throw two at
Well,
him.
it was more specific. Like if I do choose an LLC, did you say that I could still use the S corp tax structure? Did I get that
yes,
right?
yes, and
Okay.
that's one that I even have some attorneys, other attorneys that are confused on that, and they'll set people up as a corporation because they want to be an S corp, and they don't realize that an LLC can elect S corp tax treatment.
Oh
So
my gosh.
yeah, so all an S corp is a federal tax election. There's no, LLCs, corporations, those are, creations of state law. Those are created at the state level. S corp is a federal tax election. So they're anyway, that's
So
where you can kind of have it both ways, because corporations have, if you were to form a regular corporation, meaning, Inc. at the end of it, there's
Right.
extra requirements of, technically, if you want to, protect that corporate veil, if you will, to prevent someone from suing you personally, you're supposed to be having regular meetings and observing certain formalities. And the LLC still allows those protections without as much of a strict rule on those corporate formalities.
Interesting. Huh.
And for, for a lot of your listeners, they might just be a one owner LLC, meaning, it's just them. So if they were to set up a corporation, technically they're supposed to be having a meeting with themselves every year. And, when you're the
Oh, yeah. I
sole
do that all the
when
time.
you're the sole shareholder, you've got enough hats to wear, enough things to do that, you're more than likely not going to the trouble of documenting having a meeting with yourself.
Okay. So Devin, maybe a little professional advice here for me. So the Jonas Center outpatient therapy, it's S-Corp, so it's incorporated.
Hmm.
Are you, would you suggest that I maybe take a look at changing that designation to LLC and keeping the same tax structure, S-Corp tax structure?
So the corporation isn't like this big bad awful thing. I would say, it's not bad enough that you should go back and change it. It's just if you have the choice at the beginning, I prefer LLC just because of the flexibility.
Okay.
Um, I think corporation is fine too. It's just kind of because it's so new, there's just a lot less case law on it, and like some, uh, I guess not in your industry, but in some industries, there are certain companies, like for instance, FedEx, they will not contract, they actually subcontract all their local routes to local people. They will not subcontract with an LLC. They'll only subcontract with a corporation for various reasons. But there are various random times when a corporation makes sense. But if you already have it, it's not an issue to stop because you've already got it. I wouldn't go to the trouble of switching something like that.
Okay, thanks.
And so, okay, so if you designate yourself as a corporation, you got to have all those meetings and stuff. You're talking about your quarterlies or something, and you have to track that. Um, with an LLC, you're saying there's none of that in the legal, like there's no requirement for that.
Yeah, it's not a complete and total requirement for that corporate veil. You have a little bit more flexibility. Now, if you have an LLC, I still recommend having those meetings, even if it's just with you and yourself, and documenting it, because you know just to talk worst case scenario, and when you're an attorney, you really just have to. If someone were to, yeah,
You know that.
I
Mr.
cannot go into
Positivity
a
here.
store. Yeah, I can't go into a store without looking at the wet floor sign or seeing something sharp in a corner that's gonna. Yeah, you just after enough law school questions, you just see everything in being terrible.
So you're living
But
in
if
the
someone were
upside
to
down.
Yeah, yeah. If someone were to sue you, that LLC has protection, meaning the
Yeah.
plaintiff can get what the LLC or corporation owns, but they can't go through, in the term we use is pierce the corporate veil, they can't go through and get to you personally. So that protects your personal assets from business lawsuits. Now, one of what courts look at in determining if they were to pierce that corporate veil are, is the entity being treated as a true separate and distinct thing, or is it just an alter ego of the individual? So they look at things like, are they having meetings and documenting those? Are they keeping things separate, or is this business being treated as just the owner's personal piggy bank?
And so
And so
would
that's
that be
where,
like a bank account? If you have your business
yeah,
bank account and your personal bank account, is that we always recommend if
that's
you didn't need a business bank, and you do in our industry.
yes, that is
Okay.
probably the number one thing. And even outside of legal, just from a practical standpoint, if I have a client on the accounting side of our business who comes and they need, some help with bookkeeping, it is, exponentially more difficult to help them when they're intermingling personal and business.
Yeah.
Because then, they might run their card at Walmart. Well, you can buy any number of things at Walmart. And if I know that you're somebody who's not good about keeping those separate, it's difficult. I've got to talk to you to know, okay, was this business or personal? Whereas if I have a customer who's, you know, deliberate and religious about only using business accounts for business expenses, I know that when they ran that card, it was a business expense, and then it's less to sort through, and then if you were sued, you're less likely for a judge to say, well, we're going to pierce right through this because this isn't a real entity. This is just your alter ego, your little personal piggy bank.
Mm-hmm. Mm-hmm. So, Devin, if I come back to this a little bit, if I'm just starting out, um, you know, I and I well, I so if I'm just starting out and I don't have that much money or anything like that, you're still suggesting that I do an LLC. Is that right?
Yes, and I always say start with the LLC, and maybe we get into this a little later, but I'm going to use the term LLC and PLLC interchangeably, because for your listeners, they're allowed to form PLLCs or PCs, or which is just an LLC with a professional designation. So only people in accounting, law, health, um, various professional things can form those. But I'll, just for simplicity, one less letter to say be LLC. But I always say to start with an LLC, don't make that S-Corp tax election right away, because it has benefits, but only once you're above a certain income level, and there's other factors determining, depending on what state you're in. But I LLC for sure, because that doesn't change anything tax wise. So, you're taxed the same when you form that LLC as if you didn't have one.
And so
So
that's
it's purely a legal thing.
so that's it from revenue. So you've got Great Therapist LLC, and you're making money. It's coming to your business bank account. Then those, I guess I'm checking my understanding. Then the taxes that's considered income for you, the owner, right? So if there's $10,000, let's just make it $100,000 at the end of the year in that bank account that you've made. Uh, then it looks like $100,000 in income for Paul Jonas, who is the owner of Right Therapist LLC.
That's exactly correct. So a single member LLC for tax purposes is considered a disregarded entity, meaning that there's no distinction of when that money, you could make that 100,000 and leave it in the business bank account. Regardless of when you transfer it to your personal account, it's taxed to you. So I get that question a lot of, I've made this money. Do I pay myself this year or pay myself next year? And for a single member LLC, that question is null and void. You're taxed on it once it hits.
You're paid. Exactly.
Yeah. So it's as simple as that, and you're taxed on it when it hits your account.
Okay.
Well, okay, but that brings up a question for me is like, does the LLC have to submit taxes annually? And so I show 100,000 profit or 10,000 profit in my LLC, and I don't take that money out personally. I mean, what's the tax liability there, Devin?
Yep. Yeah. So when you're a disregarded entity for tax purposes, that income is just reported on a page of your personal tax return. The specific page is called Schedule C, and all of the income and expense of the business is reported there. And you gotta say 100,000 of income and 20,000 of expenses. That $80,000 net figure then ends up back on the front page of your personal tax return and added to all of your other income.
Oh, okay.
Mm-hmm. So yeah, it does. It files a form, but it's not a separate filing. It's just a page of your personal tax return. So again, that's why when people are starting out, I really recommend that just single member LLC, no S corp election, because then it's just simplified reporting.
Okay.
So should I have a question there? Actually, so when you so that money's coming in, and that's why it's called a disregarded entity, then, right?
Yep.
Because the money from the IRS standpoint, they're like, this money went to Paul Jonas, and so that's why you're at the top of your. Like, I always think of this in terms of, I'm looking at the W-9, how the heck do I fill this thing out appropriately? That's why you're putting your personal name on line one there, where it's his name of entity or individual, Then you put your LLC name on line 2 of the W-9. Is that right?
It, that's exactly right. Yep.
All right.
Oh,
All right. So can I don't know, any other direction we want to go in this little section? I'll do a slightly, I have a new question to ask. So you start off as an LLC. This money's coming to Paul Jonas on the disregarded entity, um, or I have this disregarded entity that is great therapist LLC or whatever I decided. Um, what is the process for converting to an S corp? Well, when is it time to start thinking about that? What's the
Mm-hmm.
process for doing that? And then how do taxes look different when
Yep.
you switch to this S corp tax designation?
Yep. So the entire benefit of an S corp is savings on what's called the self-employment tax. The As a self-employed person, there's nobody withholding taxes from what you make. There's nobody, remitting the Medicare and Social Security on what you make. So to account for that, what the IRS in conjunction with Social Security does is if I make, just for easy math, after expenses, $100,000 in my business, before I pay any income tax, I have to pay a 15% self-employment tax. And that is a substitute for the traditional Social Security and Medicare that you pay as an employee. And the money still goes to Social Security. It's calculated into your benefits in future years. Um, and so the thing that can be sticker shock for someone just starting out is they're used to paying half of that. What comes out of your paycheck as an employee is 7.65%, and that's Social Security and Medicare. What a lot of people don't know is when your employer takes that money out of your paycheck, they are sending your half, but then they're matching it and sending it to the IRS. So in the eyes of the government, when you're self-employed, you are both employer and employee. So they give you the privilege to pay both halves of that. And so it can be huge sticker shock to pay that 15% before you've even paid a single dime of income tax. So it's a that is the entire savings of an S corp, in that you, with some limitations, are allowed to limit what you pay in that self-employment tax. So if you make that 100,000, the entire 100,000 is subject to self-employment tax. If you were an S corp and you made 100,000, the only portion that's subject to that self-employment tax is the portion you designate as a salary.
oh,
The rub with that is, the next question I usually get is, oh, well, I'll just pay myself $1 or
Yeah,
$5,000 or
that's where I was
some
going.
nominal thing. The IRS looks, the salary needs to be, and they will never have not given any more strict guidance than reasonable. No matter, I mean, I would love to have more strict guidance, but all they say is reasonable, reasonable, reasonable. And the only court cases we have are ones that are just egregious. So we don't really have much in the gray. Did you have
Okay.
a question, Jim?
I
oh
can
no,
know
I was going to say I may have to increase my salary or decrease it or something.
Yeah, 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 exactly.
You're
And it's
already pretty unreasonable.
yeah,
Right,
yeah,
right.
yeah. They look, and so I've been in audits where I've had salaries that are maybe a little on the low side, but
Yeah.
they're very concerned about people that are just egregiously abusing it, because there are some people that neglect to even pay the salary because you have to file, a W-2, all those payroll forms that can be confusing. And so some people that don't have good guidance don't do it at all. And so that's what the IRS is most concerned about. So I tell people not to get too worried about it. I mean, they want to see that you're making a good faith effort to do that. So, half of what you make is sometimes a good start. If you make that 100, you do 50,000 as salary, 50,000 as what we call just a distribution of the profit. So the reason I don't always recommend that is because there are additional costs with becoming an S corp. So yes, there's benefits of that self-employment tax savings, but there's the costs of, you need to run payroll just like you would if you had, employees besides yourself. You need to file quarterly reports with the IRS. your state tax department, your state unemployment department, you need to now file a separate tax return for the S-Corp. So when we were talking about the single member LLC, the disregarded entity, that's just a page of your tax return. An S-Corp files a full-blown tax return on its own, showing, how much they made, how much they paid the owner, and all of that stuff. And then the S-Corp issues a form called a K-1 to the owners, and that is, shows their share of the profits. And then that goes on their personal return. So that S-Corp return comes with the cost, running payroll comes with the cost. You have to be a little more organized. And to be honest, I've had clients who financially it might make more sense for them to go that S-Corp route. But if it's kind of on the fence on whether it makes sense, if they're not organized, I'm less likely to recommend that, because it is more work, and sometimes that's not worth the tax savings.
Yeah.
My first business, I think I started as an S-Corp, but I was very unorganized. It was rough. It was rough. Remember to fill out those quarterlies and all that stuff.
Yeah. And and honestly, some of the payroll tax penalties are much worse than income tax, because even though you're the employee, they're strict on payroll taxes because generally speaking, you're dealing with other people's money, your employees' money. So the penalties and the requirements for payroll tax is actually sometimes more strict than income tax.
Okay. So Devon, I got a question, because you're, starting out single entity LLC or PLLC. What
Single
happens?
member.
Single member.
Mm-hmm.
Okay. So what happens if I want, if I'm with a partner, or, I start growing and bring in some more people?
Mm-hmm.
Does that change the tax situation on the LLC? So it's not single member anymore, right?
Yep. Mm-hmm. Yeah. So it's a multi-member LLC at that point. And when the state started creating LLCs, the IRS didn't want to have to create new forms for LLC tax returns. So LLCs with multiple members file a partnership tax return. And that's another, again, there's things that are admittedly very confusing about the tax versus legal things that conflict with one another, because I'll have people say, well, I'm an LLC. Why am I filing a partnership tax return? There's no LLC tax return. That's not a thing. The IRS, if you have more than one member, by default, you are taxed as a partnership. And all that means is the same tax situation applies as if you were a single member, in terms of you pay unemployment tax or the self-employment tax on that full earnings. But now, because there's multiple members, it has to be reported on a separate tax return, and a K-1 is issued to both the owners.
Okay.
And so there are times where I'll recommend to do the multi-member LLC and not elect S-Corp status. One being, if the income to each of them is still going to be lower than where the S-Corp makes sense, sometimes it is still fine to just stay partnership from a tax perspective. And then another, I guess, really when I say the only benefit of an S-Corp is the self-employment tax savings, I mean that in that S-Corps have a lot of limitations also. They're called S is for small, so they don't give you the flexibility to be as flexible. So for instance, if I start a company with my buddy and we say, okay, I put in X amount of cash, you put in this much. If we earn more than a certain amount, I get, a higher percentage of the income. If we don't, we split it equally. So there's kind of these preferred distribution rules you can use with a partnership, and with an S-Corp, it's if you're a 50% owner, you need to get 50% of the distributions and 50% of the income. You don't have the same flexibility there.
Okay.
So I've got a question. If I set myself up as a single member LLC and I want to bring on employees, in behavioral health, you really can't bring on, it's a lot harder to have 1099 contractors working for you. So now generally everyone's going way route. Does that change anything, or how does that change the calculation? If as a therapist, started my practice and I want to add another therapist as an employee.
I think it changes my rationale because then, if you've added an employee, well, now you're already running payroll. So I'm not, I don't factor in the cost of running payroll anymore because, well, you're going to have to do it anyway. So I think once you bring on an employee, I've had times where, well, we're kind of on the cusp of whether S-Corp makes sense or not. We may as well just do it now because you're already having to run payroll. It just makes sense. So it does factor in that, sometimes you have to do it anyway, so that there's no sense in treating that as a cost because you're already doing it.
Okay. Or if your plans for growth and you intend to add people, you might as well just do it now. Um,
Yeah.
You're saying that maybe. And so then my next question related to that would be, what's the conversion process look like? When you talk about going from a single member LLC to an S corp, and what you'd have to do to get that done.
Yes. So there's a form you need to file with the IRS. It's called a Form 2553, and that needs to be filed within, I believe it's by February 15th of the year you're wanting to be an S corp. So if I want to be an S corp for 2026, I need to file that form by February 15th, 2026. And that would allow me to be an S corp retroactive to January 1st and beyond. Um, they have rules where they allow you to file a late election, and they're very, very lax about that in terms of I've never once had a request for a late election denied. Um, they I mean, any number of excuses work. I mean, even just something marginally reasonable. Um, I have had people, and there's a lot of attorneys without tax experience that are just notorious for this. They just put it in the operating agreement, the bylaws that we're going to be an S corp, and then nothing else. Well, the IRS has to allow you to do that. You need to file a form with them. So what I see commonly is the attorney, you're going through all this stuff as you're setting up this LLC, and maybe he does tell you, hey, you need to talk to your accountant about filing this form. And, you've got so many other things flying past you, you forget about that. And I've had that umpteen times where the form doesn't get filed. And, thankfully they're flexible, but it is a pain and there's extra stuff to do if you don't file that form. So make sure that form is filed. And when it's filed, the IRS will send you back a letter saying we've accepted your election to be treated as an S corporation. And I can't stress it enough. Save that letter. Save that letter because
Yes,
you will
yes.
be asked for it again. Especially, I'm sure in some of the credentialing maybe, and I've just had banks ask for it. Save the letter because if you don't save it, you will have to call them and sit on hold to get a new one sent out.
Yes, the CP 575, I know, or SS4, I think we usually call it the CP 575.
Mm-hmm.
We request that all the time. That is a requirement of working with Breezy or Phoenix on the credentialing side as well.
Yep.
Um,
Yep. That first EIN letter is what you're talking about. And
yep.
it blows my mind sometimes when people get it and they're like, all right, looks good. And they just close the file down. It's like, you got to save that.
And so then what you're saying too is that you then file for an S corp after being as an LLC. You get another letter. You got to save that one too.
Yes. Yep. That one confirms the effective date of your election. And that's not always correct in terms of they might say, oh, we didn't receive this until this day, so we're not going to treat you an S corp until, March 1st. And so it's important to look at that to know, okay, are we matching up with what they said versus what I think? So the IRS, especially now with having the smallest staff that they've ever had, are not organized. So, it's important to look at those things to make sure that they're on the same page as you are.
Oh, and that would affect how you file your taxes, for that year
Yes.
too, right? So you'd be single member, that's all individual income. And then March 1st, if that's the date they give you, then that would all be, an S corp
Yep.
income over on that side.
Yep.
Okay. Okay. Huh.
Okay.
Well, shoot. Okay. So if you're, So you talked a little bit about your entities here, and then we've got further into the documentation too. And I guess I'll also say, because we work with a lot of folks who can't find their CP 575, we have to tell them they have to call the IRS. Yep, it's going to be an hour, so you plan on getting some case notes taken care of. And then wait for that, the 147C. Um, this is great. I can play some alphabet soup with you, Devin. So all these foreign names, but they send that 147C back because that officially tells you what the government understands you are or your business is as an entity. Um, what happens when what do you recommend for addresses or like business addresses? We have this thing in behavioral health where a lot of times people will list their home address for their business address, but obviously you don't want that public as far as your service address for where you're going to be doing therapy or where you have the contracts. And so I know like you can if somebody really wanted to, they could search your business out on the Secretary of State site or something like that. Um, but so what's the process for changing an address? If you've got a home address that's kind of all over the place or your contracts, or you decide to finally get your office and you want your business address to be that office. Can you talk a little bit about that process?
Yeah, that one can be time consuming because the first places you go is the IRS. There's a form called the 8822B. You can file to change your address, or on any of if you file your tax return, you can put a new address, and then there's a box that says address change, and that will notify them that you've changed your address, and that's probably the most common one and the easiest one. Um, with the Secretary of State, you can file a form there. Those are honestly the easier ones because those have a process. Where it could be difficult is, for all of these different contracts you have, I'm sure there's no central place that changes. So
Right.
it kind of on an individual basis, and sometimes it's kind of a long process in terms of you change it, and then you might get a letter at home, and that's your prompt to say, okay, they have my home address still. But I usually recommend to start with a PO box if you can, because then you don't have to change that, or frankly, just whatever address you're going to check the mail at, because that's another thing that seems easy but that can be difficult for people is, they say, hey, I got this IRS letter, and I look at the date and it's 2 months ago. I'm like, well, now by the time it's 2 months, you may have missed deadlines, there may be additional penalties added. So that's one thing, but I totally agree with you. All that stuff is public record, and you know, notwithstanding that there's weirdos out there, there's also salespeople out there, and you don't want them with your home address sending you all sorts of spam mail.
Yeah, yeah, and that one of the biggest things we've been preaching at Phoenix Credentialing is contract maintenance. So get your contracts in order. And the nice thing with most of the payers, not maybe all of them, is they have multiple different types of addresses you can file with them. So they have the mailing address, and that can be a PO box. They have the business address, which should be what's registered with the state and the IRS, and then they have the practice address, or where you're going to be seeing clients if you were to see them in person. So we preach a lot about getting all that in order. So a lot of times, same thing when people register their NPIs, and we talked about this a little bit in our previous episode. We'll be talking more about the contracting in a future episode. But when people get their NPIs, they just kind of throw their home address on there because that's the biggest business address. But that gets picked up by all these NPI engines that are out there. So suddenly people are looking up your name, your just your NPI, which is public record also. Your home address is sitting next to all that stuff too.
Yep.
So I think a lot of questions, there's a lack of clarity of just how meaningful it is to make sure you have right addresses in the right place. So why do you think we've talked about all these different business entities? Why do you think choosing the right entity from the beginning is so important? And I always preach the less change, the better. Whenever you're starting a new practice, or if you've got an existing practice that you need to make these changes to, but the more static, the better. But, are there any other reasons for that? Is it just to reduce complexity, or can you talk a little bit about just making sure you've got it accurate and correct in the beginning? What that is.
I think I definitely agree with what you're talking about and keeping it simple. Um, it's so much easier to be the right entity from the start than it is to operate under a less than ideal structure and then go back and change it. From a tax standpoint, you the way the IRS sees it is you've built up value in this entity. And so even though you may not own, physical things, you have, blue sky value that if you want to transfer that to a new entity, oftentimes the IRS sees that as a taxable transaction. So there can be tax consequences of trying to restructure that. So it's much easier to be right from the get go than to try to go backwards and undo those things. Then on top of that, if you do want to change later, let's say there is no tax impacts, we're able to work around that. Well, now, from your guys' business, you're talking about redoing umpteen contracts and updating your business address and updating your business documents, and inevitably some of that gets missed, and it always happens at the worst time where someone will say, oh well, we have this entity on file, but you're operating as this entity, we can't pay you. And then
Right.
I've had where we've had to resurrect old entities that have long since been closed because an insurance company or someone will refuse to pay this new entity because they never had a contract with them.
Okay.
Mhm.
All right. So, switching gears here, you've said one of your goals is to debunk a lot of bad tax advice that you see floating around online. And, I don't know how many times I've gone and searched like a Reddit thread or whatever other forum for stuff like this, and finding the right answers can be pretty difficult amongst all the noise. So, what are some of the worst or most misleading things you've seen people believe?
Oh man, the list is long. The list is long, and I think it. Most of the things you see online that are incorrect have just the tiniest kernel of truth. They're. I'd say the one that comes to mind is vehicles. Um, there are times where you're allowed to deduct a business vehicle. Well, what you see online is, yeah, no matter what, you deduct the whole business vehicle. It's for your business. Go out and buy $150,000 Mercedes G wagon, and it's a great idea. That's the one I see the most. And what's misleading about that, or about any tax thing, some of this bad advice, is it needs to be ordinary and necessary for your business. So, and you have to actually use it for business. So if you're, a mental health professional, you're not you're not doing much, driving for your job. And keep in mind, commuting from home to the office doesn't count.
Right.
So, sure, you can deduct that vehicle, but the IRS is going to want to see a mileage log, and they're going to want to see, okay, of the 10,000 miles you drove last year, how many of them were for your business? And if you can only come up with 1,000 miles out of that 10,000, they'll say, okay, here's 10% of the deduction that you originally took. Um, that's a big one. And then just a lot of things that are just general. Uh, I'm trying to find the good, respectful term for this. Just funny business, maybe. There's a lot of funny business that you can't. There's a lot of talk of, oh well, then you set up this company and you pay that company and then this, and there's all this circle of transactions. And the IRS, their biggest tool is something called substance over form, meaning they don't care how you papered this transaction. If you put on paper that the transaction was this because it gives you tax benefits, but in reality it was just a sham transaction so that you could do this other thing, they're going to treat it as if it was this other thing.
Okay.
So put another way, if you want to get from A to D, but going directly between them is a taxable transaction, but if you go from A to B to C to D, and those steps in between are just to avoid the tax, they'll disregard these steps in between and just treat it as A to D. And so there's a lot of that people don't realize, and I think they get a lot of the advice gets people looking in the wrong areas in terms of it's absolutely important to deduct everything you're entitled to deduct, but too much focus on that I find limits people. I really try to preach if someone comes into my office and their first meeting is all about what can I deduct, it's important to know that, but I don't want them to feel like by deducting something they're getting ahead. You know, spending money is not tax planning. Is I don't know, probably going to be on my tombstone someday.
Well, and speaking of deductions too, like what can you get into what a deduction is or what it means? Like
Absolutely.
how does that make sense? How do you make it make sense for like a solo practitioner or a small group owner? Um,
Yep.
yeah.
Yeah. So a deduction just means you get to deduct that from your taxable income. So if I make $100,000, but I spent $10,000 on ordinary business expenses, that doesn't mean that the government's reimbursing me that $10,000. I still spent $10,000, but now instead of being taxed on 100,000, I'm taxed on 90,000. So what I tell people is it doesn't mean things are free. It means they're on sale. Business expenses are on sale for whatever your tax rate is. So if your combined federal and state tax rate is say 35%, everything's on sale for 35% off. That's a business expense. So you still spent 10 grand, but you saved 3,500 in taxes. So the net cost is 7,500. So
Okay.
absolutely, it's helpful, but it doesn't pay for it. You don't. That's not a reimbursement.
Okay. All right. And one of the deductions I think there's a little confusion around in our industry is unpaid client balances. So, can at what point should or can a provider write off those balances, and then does that count as can you deduct that from, income? How's that whole process work?
Hmm. Generally speaking, most small businesses are on the cash basis of accounting. And the difference between cash and the other method, which is accrual, is in my business, if I'm on an accrual basis, I report my income to the IRS when I send the client the bill. It is it is irrelevant when they pay me that bill. So that's accrual basis. Cash basis means I am taxed on the income when the client pays me. So I could have, all these invoices sent out waiting to collect, but I don't have to pay tax on them until I get paid. And for almost every single client, I recommend cash basis, especially in your industry where it could take a while to get paid. It's a very bad deal to be paying tax on money you have not received yet.
Okay.
Now, for a
Yeah.
cash basis taxpayer, they don't have they don't get to deduct those unpaid receivables because they never received them. So in essence, they don't get to deduct them, but they also don't have to pay tax on them. So I if you were allowed to deduct those ones that you haven't received, you'd in essence be double dipping
Yeah, that makes
because
sense.
number one, you didn't pay tax on it because you never got it, but then number two, you deducted it again. So if you're an accrual basis taxpayer, which is pretty rare, in those cases you could because you've already reported it as income, and now because of that you get to get rid of it. But for a
Oh,
cash basis person, no, um, because you never pay tax on it in the first place, so you can't deduct something that was never yours to start with.
so
Okay.
you can just write it off, and there's no tax benefit.
Well, yeah, yeah, you write it off, on your end in terms of just saying I'm done trying to
On
collect
the
this,
books.
but
Yeah,
it doesn't show up on your tax return because you never received it anyway. So,
got it. Got it.
Makes sense. I
Hmm.
think
yeah, I
that
get
does
that. I
line
get
up
that
with.
one
Yeah.
Okay. That should line up with most of our providers, I think, that we work with. Um, well, and then I know in the past you've mentioned that spending money isn't tax planning. What can you explain to the people what you mean by that, and why is it trap for small business owners?
a lot. Absolutely. Yeah, that's the one that um, I see a lot of, and the people focus on the wrong things in that they want to spend money to get out of paying taxes.
Oh yeah.
But then they have no money. And I hate to I hate to pick on farmers, but being having an office in North Dakota, I deal with farmers a lot, and for them, it's very easy to get to the end of the year. You're showing, say 100,000 of profit. It's very appealing to say, I could go buy that big shiny tractor, get my income down to zero, and pay no tax. And it's especially appealing because if you can maybe go buy a tractor for $80,000, you don't need to outlay that $80,000. You can get a loan on it, and so people end up in a trap where they keep buying things they don't need to reduce their tax liability, and then they get to the end of the road, whether it's retirement or whatever, and all this work they've done, all they have to show for it is a bunch of equipment or things that have depreciated. So what I always say, I get this question often, is should I buy something? What should I spend more money? And my first question is always, well, do you need it? If that answer is no, then we don't even go past that point. Do not collect $200, do not pass go, stop. Um, if you do need it, or you might need it in the next 9 months, then it does make sense to spend that money now versus later. It's always better to have that deduction now. Like, let's say we're in December and you've got a certain amount of income you're showing. If you buy something on December 31st, that's going to reduce what you owe in taxes that upcoming April. If you wait till after New Year's and you buy it on January 2nd, you don't receive that benefit until a year and 3 months later on the following April 15th. So all else being equal, if you can accelerate it one more year, you essentially kick that tax can down the road. So there are times where it makes sense to time those right, but it doesn't make sense to spend just to get out of a tax hole. There are very few areas where you get to kind of have it both ways, and that one is like retirement contributions. So if I have someone sitting across from me and they've got some taxable income, they're thinking, I want to go buy that new vehicle, I want to get that tractor, I want the big shiny thing I can park in my yard. I'm thinking you should put money in retirement. And so they give you a look kind of like when you were a kid, or with your kids, when they're like, oh, you're out driving, and they're like, can we stop at McDonald's? And you say, we have food at home. Retirement plan, putting money in retirement is the food at home.
Okay, thanks, Dad.
That's my mantra that my son and
Oh my gosh.
other say. It's like, I have no money. We have
Yeah.
McDonald's. We have no
No,
money.
it was specifically and repeated multiple times. Can't. No money. Dad, can we go this thing? Can't. No money. Dad, can we go buy this fancy thing, or I want this thing? Can't. No money.
No.
Mhm. Mhm.
You know, and you know exactly what I mean by that, Devin. There was no money for that.
Yeah, there you go. Yeah, it's earmarked. Yeah.
Oh man.
Oh, shoot.
Well,
So yeah, I usually when I tell them you could do retirement contribution, it's kind of like I usually get a, oh
Oh,
yeah,
I'm
okay.
excited about that.
Because that's one where you move the money from your right pocket to your left pocket, and you save tax because you get to deduct that contribution. Now you have to pay tax on it later when you take it out, but it's still your money, and you get to basically defer that tax until later. And so that's the one that the people I really see who are able to reap the benefits of self-employment are the people who take advantage of those options. Because when you're self-employed, and especially if you're the only employee, you can offer very good benefits that you couldn't offer or wouldn't have as an employee. The amount you can contribute to your retirement account is more than most people would be able to even cobble together. So that's where the big benefit of self-employment is.
Okay.
Gosh,
Well,
you're sounding like a financial planner or something. So wise wisdom.
Yes.
so, so I'm sitting here thinking back to the days when I first was doing, like, I was doing my own tax, I had, TurboTax or something like that. I go through it. There was like 4 things I had to put on there. And then I started a business and had kids and all that stuff. Things changed, but when should a behavioral health provider stop doing their own taxes and hire someone to help? And
Hmm.
part of that too is like I'm listening to you talk about all these different complicated situations that we just discussed, or just all the stuff I just learned from you, or we've all been learning from you uh, in this conversation. I'm I'm so glad I'm so glad I don't do my own taxes. So how would you help a behavioral health provider make that choice? Or what advice could you give? Or would it might make sense to go do your TurboTax thing, but come talk to me
Hmm.
when you get here.
Yeah. Well, your question's a little like asking a barber if you need a haircut.
Oh, I know that. Yeah.
That's my caveat. But I will say, if you are, comfortable with it, I'd say that's the number one thing to start with is, are you comfortable with it? There are levels of, some people don't even want to mess with it, even if they're just a W-2 person, and they just don't feel comfortable. That's step one. I mean, I would never say it's a waste of money if you're not comfortable with it. When you start to get to be self-employed, I mean, the second you even get a 1099 and you might have some expenses to go against it, that's when to me it makes sense. And I'll admit the prompts that you go through in the TurboTax programs are pretty good. And if you might do it on your own 3 or 4 years, and we might come up with the same results. But
Okay.
that one of those years is where I might catch something that you're not aware of, or I might see an opportunity that you wouldn't know any better. By going through TurboTax, you're essentially meeting your obligation, you're fulfilling what you need, but you're not really getting ahead or planning. And that's the biggest thing in our industry is everyone wants advice, they want planning. And sometimes a lot of that advice comes just while I'm doing the tax return. And you don't necessarily need to have a full blown, monthly advisory discussion. But there's a lot of times where I'm doing the tax return and that's where I see things and say, don't you have this, or don't you, I feel like you would probably have this expense. So it's just things like that. I don't think, generally speaking, you're not going to get in trouble. I mean, they prompt you pretty well, but you will miss out on opportunities. Now, if you have a separate entity like an S corp, or you've got a partner, I would not touch that on your own. And frankly, with what TurboTax is charging for some of the business returns, it's pretty expensive compared to having a professional do it.
Okay, that makes a
Okay.
lot of sense. Okay, before we're going to be wrapping up here pretty quick,
Sure.
but before we do, let's can we do a few quick scenarios? Is that okay?
I would love to. Yeah,
All
absolutely.
right. So I'm going to throw a scenario at you, and just let me know, what entity type would you probably recommend? How would you recommend them to set up their business? And I know kind of covering all this, but let's do this. So, what would you recommend in this scenario? A solo therapist is just getting started, and they're seeing about 5 to 10 clients a week.
That one, I assume it's going to be kind of a smaller income. I would go with the single member LLC, no separate tax election, on that one. That's an easy one.
Okay. Okay, yeah, that'd be, let's see, 10 a week, that'd be then 40. So that'd be about $4,000 a month revenue that they'd be
Hmm.
getting back.
Yep.
Okay, so then how about a therapist who's grossing 100,000 to 150,000 a year?
That's where an S corp is going to start to make sense, because now you're getting up to where the cost benefit for the S corp makes sense. So I'd probably do an LLC and elect S corp tax treatment.
Okay, and then and I might know the answer to this one, but two clinicians starting a practice together.
That one, I could see it going a couple ways. For sure, an LLC. Um, what could it would depend on the amount of income they're going to have. So there's almost like a slot where the S corp makes sense. Where if you're below it, it doesn't. If you're above this level, it does. But if you're above even a higher level, it actually doesn't make sense anymore. And
Oh wow.
where that happens is if your income is above like the Social Security cap. And sometimes the S corp has no benefit because your income is so high that you're capping out on that. So the Social Security cap it moves every year, but it's about 170,000 each. So if this is going to
Okay.
grow if there's two clinicians, but maybe they're going to have, other people under them, and it's going to be a pretty high grossing business. Sometimes I don't recommend the S corp because it doesn't have that benefit anymore because of the income. But for sure, an LLC, and depending on their projected income, you may leave it as a LLC taxed as a partnership or make that S corp election.
Okay. All right. And then what about a fast growing group planning to hire therapists and admin staff?
Fast growing makes me kind of similar to the last one, where you may it would depend on the income on whether you would make that S corp election or not. Um, Now, the other tricky thing with that is, it sounds, when I hear fast growing, I think expensive. I think of a lot of upfront costs, and one of the limits of an S corp is, let's say I go and, equipment's an easy one to say. Not that you guys would have a whole bunch of equipment, but a fast growing practice might have a lot of office furniture, and we just bought furniture for our office, and it's incredible how expensive it can get. Um, so let's say you do that. Let's say you and your partners each put in, $1,000 each, but then you go and get a loan for, 60, 70,000 to build out all this office furniture. That first year, you might have a loss.
Mm-hmm.
With an S corp, the amount of loss you can deduct on your personal tax return is limited to the cash you put in. So that, I can't even remember which numbers I said, but if you each put in $1,000, that's all you get to deduct. The rest carries forward to be used when you either have income or make additional contributions. So sometimes I don't recommend it, because you can end up in a situation where, okay, we're losing money, at least on paper, on this first year or second year, but we can't deduct any of it. And so there are times where I I don't do the S corp for that reason. But again, that would also depend on, what's their initial cost to do this. How quickly are they going to go from that loss position up to a profit before it makes sense.
Okay. And, all right. Well, and so I've got one more little question here: is what about that poor seed corp that we haven't talked about at all? Why is that not in play here, or what does that mean? And I don't think we'd ever recommend that for most of our providers. So if you could just touch on that quick. What is this poor little ignored checkbox on the W-9 here, or the
Yeah.
W-9?
Yeah, the C corp is the creature of old. And S corps are new too. So before, it was, C corp or partnership was all. And the trouble with those is, you're playing by the same rules as Ford Motor Company. Most publicly traded companies are C corporations. So the administrative burden is as high as it gets.
Ooh.
Okay.
On top of that, there's double taxation with a C corp. So a C corp makes $100,000. They'll pay 21% tax on that. They distribute that income to you, then you pay tax on what they distributed to you, and the corporation doesn't get to deduct it. It's a dividend. So there's a situation where you can run into double taxation. I rarely recommend C corps. I do recommend them for like startups often. Something like technology, there are certain benefits for that. But in like personal service, whether it be accounting, law, mental health, it's rarely a good idea.
All right. Thanks for touching on that.
Yeah, of course.
Anything else you think behavioral health entrepreneurs should know before jumping into business ownership?
I would say the only thing I think we didn't touch on is who you partner with, in terms of, if you want to, some of these situations are, people that would go into business together, and it's, in a way, it's a marriage. And you should put almost as much thought into your business marriage as you do into your actual marriage. And there are times where a business divorce can be just as messy as an actual divorce. And so I think that's something to be careful of. I've unfortunately seen business partnerships ruin friendships. People that used to be really good friends. It's like, you might have a good college or high school buddy, and then he wants to be roommates, and then you just end up hating each other or something. It's something to really be careful of. And, sometimes it's easier to talk about some of those potential conflicts before they happen. So having a lawyer draft a good agreement that goes through some of those things of, if we disagree, how can one person leave gracefully? Because what'll happen is if you don't plan for that, you might have an entity that, as a whole has some value, but as, the partners start fighting with each other, it almost cannibalizes itself and everybody loses. So I think people should really be careful and think hard about whether they want to partner with anyone, really. I mean, even if you get along great, there are times where you're going to disagree and you're going to have to get that other person on board. And if you can't, then you don't get to go your direction. So I think really thinking about that is important. And a lot of people don't, because they're excited. They want to do it together, and they never think about some of the potential issues.
I'll tell you, speaking from personal experience, dealing with my father for the last decade.
It's been all your life, son. All of your life.
Oh yeah, forgot about that. Um, as a business partner, I get a lot of raised eyebrows when I say I work with my father. Like, oh yeah, how's that going?
Yeah.
And I then get to tell them that, hey, we still get to hang out on the weekends and enjoy that too. We don't always talk about work. So
Yeah,
I think,
exactly.
we've got pretty lucky, but yeah, I've definitely heard of some of those situations and seen some of that happen.
And I've seen, speaking of working with family, I've seen that go both ways in terms of like it can go very badly, but I think there's also times where working with family can go better because you have this relationship where you can be a little more candid. You don't need to, you know, uh, put a sugar coating on thing because you've known each other and dealt with situations probably way more difficult than whatever could happen at work. You've just got a better ability to communicate. So I think there's also that to consider.
Devon, Paul can get angsty. And,
Oh boy, how deep are we
and
going
that
here?
goes, that goes back to probably about age 10. So
Yeah, yeah.
otherwise, he's really pleasant to work and play with. That's
There
it.
you go. There you go.
Yeah.
Well, thanks for your time today, Devin. Before we go, we have one last thing. We call it the reflection route, and we ask one another, what have you been thinking about lately? Personal, professional, anything at all. So yeah. So I don't know, Devin, what you been thinking about lately?
The last, 24 hours or so, I found out my mother-in-law on a whim purchased something called a sugar glider. It's some sort of animal. It's kind of like a flying squirrel looking thing.
Yes.
Huh.
I don't know what that's been on my mind. Number one, my father-in-law doesn't know yet, and number two, just the how that's going to go. They've got a like 12-year lifespan, so she signed up for a pretty uh, she signed up for a little while here with this sugar glider. But my 7-year-old nephew talked her into it, and after she did it, he he goes, Nana, I just want you to know you made a really good decision today. So we'll see if that's true or not.
Oh, great.
That's great. That's great.
Oh, man. Oh, shoot.
How about you, Dad? Anything on your mind?
On my mind. Well, my mower, the deck belt broke, and I've
How's
never
that going?
changed it. Well, I ordered a deck belt, but what's on my mind is, okay, how am I going to get this deck off of the thing so I can put this belt? And there are instructions as to how to wrap it around things, but that's probably my latest thought. I just changed the bearings in my other lawnmower, and that is very satisfying. So, so a couple of things. That's about it today. Well, what
And
about
how?
you?
Oh, me? Well, I've been thinking about boats. My father-in-law got a new fishing boat. That well, I'll start off with a bang and say we accidentally sunk it, but
Oh,
but let me back up a little bit and say we did have it tied to the dock, and there was a storm, and I had tied it up so the back was facing out. And so it ended up actually getting swamped as the waves were coming over. But fortunately, Folks saw that in enough time to take care of that, so the engine, the motor didn't go underwater, and we were able to get it running again the next day. So everything turned out okay, but definitely learned one of those lessons about which way to point the boat when you're done.
Jeez.
Yeah.
Well, and Dad, I got to ask you, how are your solar panels? I mean, we've talked about those the last couple episodes.
Oh, I love my solar panels.
Devin, all he does is talk about his dang solar panels. He was talking about them last night at our one of the things we were together for.
I got a check from Excel, so I'm generating power for Excel customers. It's fantastic.
Wow.
Thank
All
you.
right.
Thanks for asking. Yeah.
Yeah. Oh, yeah. So, all right. Well, so thanks again to Devon Liljenquist, CPA at Arrow Advisors, for joining us and helping us make sense of this business structure and tax strategy. If you are a private practice owner feeling overwhelmed by the financial setup of your business, you're not alone, but you're also not stuck. So, with the right structure and the right support, that can make all the difference in the world. Until next time, keep your eyes on the horizon.
Keep your eyes on the horizon.